Welcome back friends to the class 18. Now we have cleared the concept of LTV and collateral cover. In this video we will discuss a very important topic, that is the difference between mortgage, pledge and hypothecation. Many people are not clear about the actual difference between these three items that is used in the industry all across. So we will learn thoroughly what is the actual difference between them. So what's the difference? So whenever you are submitting a security to the bank, you are giving a security to the bank against a loan. So bank creates a charge on that security. Bank creates a charge on that security to in favor of themselves, in favor of lender, in favor of themselves, right? That charge is of three types. That can be in form of pledge, that can be in form of hypothecation, and the last one, that can be in the form of mortgage. Mortgage is also of three different types: registered mortgage, equitable mortgage, English mortgage. We will also discuss about it, but it will be covered in upcoming next one or two videos, right? So what is the difference between these three items? Listen carefully. Pledge. First we discuss about pledge. Pledge is a way to create charge in which the physical possession of the security is kept with the lender. Remember, the physical possession remains with the lender, not with the borrower. It means the security, the asset on which bank has created the charge will remain in the custody of the bank, right? What are the example of these type of loans? Like gold loan. When you take the gold loan from the bank, you submit the original gold in the custody of the bank, right? So the security, which is gold, remains with the bank. When you take the warehouse receipt finance, don't worry about this topic, we will cover in the working capital products. Warehouse receipt finance is basically a mechanism where bank finances the purchases of your agri items. So bank deploy their own individuals outside that warehouse, which keep control over all the inventory in or out, or incoming and outgoing of the inventory. So the whole stock remains under the control of the banks basically. So warehouse receipt finance is or is another example of a pledge financing, right? So obviously, since the possession of the security is kept with the banks, this is done of movable items only. You cannot shift the possession of immovable items from one person to another, right? Only the movable items are covered under the concept of pledge, right? So the advantage of pledge is this is very easy to sell. Since the asset is under your custody, it is very easy for you to sell that asset to recover your dues, right? The second type is the hypothecation. Now, what is hypothecation? Hypothecation is also done for only movable items, but the only difference is that the asset on which charge is created, that asset remains in the custody of the borrower. In the custody of the borrower, bank or lender does not take that asset in their own custody, right? So what are the examples of these type of agreements? Auto loans, vehicle loans. When you finance a car, the car remains in your custody, right? Bank has a charge on the car, but car remains in your custody. Whenever you take the cash credit, packing credit limit, you hypothecate the stock and debtors to the bank. The stock remains in your factory. You are free to use that stock in whatever way you like, right? But the charge on that stock remains with the bank. It's just the physical custody that remains with you, right? Machinery term loans. Whenever you take machinery term loans from the bank, the physical machinery remains in your custody, although the bank has charge over it. All of these are movable items only, right? So this disadvantage of this method is these assets are comparatively difficult to sell, because you have to first take the possession of these assets through court, through law, from the borrower. When you take the possession, then you have to complete certain legal formalities to sell the asset in the market. So recovery is comparatively difficult than pledge system in hypothecation. The third one is the mortgage. Mortgage is done only for the immovable items like land and building. the possession obviously remains with the borrower. Example is very clear: land and building. When you give land and building as a security to the bank cannot pledge it, the bank cannot hypothecate it, bank has to do mortgage process of it. So mortgage is of three types: registered, English, and equitable mortgage. We will learn about it in coming one or two videos. This process is again difficult in terms of recovery, because taking possession of a immovable property is a very tedious task, especially in Indian market. So once you take the possession, it takes almost 3-4 years generally to just take the possession of the property. After taking the possession, selling the property is another very difficult task here in India. So this is a very difficult process as compared to pledge and hypothecation. So this is what I like to cover in this video. In the next video, we will cover what is fixed charge and what is floating charge. Thank you for watching.